This highly profitable strategy makes you highly profitable trader. This strategy is based on supply and demand. This TradingView indicator aids you when to buy, sell, and take profit. It is known buy and sell in green sine wheels chart. You can get with the trend. This is not a luck, it's a winning strategy. Finally, 5 years of experience taught me which strategy works. You can't trade with your fear and emotion.
Alright guys, and now we're back at it for the confirmation entry. This is the second video of the 3-part series for entry types. So let's dive into what exactly a confirmation entry is and how we can utilize it in our trading, and as well as the benefits of it compared to a risk entry. So the confirmation entry is basically a fractal version of the risk entry, locating the initial entry criteria repeated on a lower time frame to confirm the validity of the point of interest or order block. So fractal basically means the same pattern but on a smaller scale. Okay, so what that means is if I find a break of structure and a retracement, break of structure, retracement, order block mitigation on a higher time frame such as the 1 hour or the 4 hour, the confirmation entry is simply finding that exact same pattern but in a fractal version, so on the 1 minute or the 5 minute preferably. Okay, so as you can see here, this is the same diagram that we used in the risk entry lesson, but in this scenario I just have an arrow pointing to the higher time frame POI, explaining that zoomed in on a 1 minute or 5 minute time frame, you'd be looking for this exact same thing. So basically we tap into the higher time frame POI, which is right here. We then create a smaller break of structure, a small solidified high, another solidified low, breaking structure once again. Just rotate that. So that line there is the fractal break of structure, right? So you tap into the POI, the higher time frame POI, and then you start to create that same pattern once again. And as soon as that small break of structure happens on the 1 minute or 5 minute, you then look for a lower time frame POI, okay, or order block. So what was the point of origin for that minor break of structure, okay? So we locate that, the point of origin, and then we simply set our order for the retracement and mitigation of that zone, okay? It's very simple. Now, what are the benefits of using confirmation entries? Well, they're useful if you are questioning the validity of your order block or POI, right? So if price is headed towards your POI very aggressively, maybe not in a corrective manner, and you're not sure if it's going to hold or not, and you're too wary to use a risk entry, then this is where the confirmation entry comes in handy, because you can wait for price to tap into the higher time frame POI, and then instead of hoping that it holds, you can go to the lower time frames and look for confirmation that it is holding, okay? So if you see this fractal pattern on the lower time frames, that's a confirmation that the order block was valid to begin with and your analysis was correct. And then you can start looking for entries, right? So number 2 here, if you have time to be on the charts, you can have a safer, more calculated entry, okay? So the risk entry benefits were that, or one of them at least, was that you don't have to be on the charts all the time. If you have a busy lifestyle or if you work a 9-to-5 job, you can set and forget your trades, right? But if you do have the time, if you have the luxury of being able to sit on your charts at your desired trading session and truly wait for the best opportunities, then that's where mastering confirmation entries can really level up your trading, okay? So number 3, you can achieve tighter risk to reward by utilizing the lower time frame structures. And what this means basically is that, for example, if you were to set a risk entry here on the higher time frame POI, set your stop loss just above it. Let's say you're left with about 7R for your potential position. Well, if you utilize the lower time frame structure and look for this fractal pattern, then your entry is going to be much, much tighter. So technically you will be a little further away from the initial point of interest, maybe down here or something, but your stop loss, instead of, for example, like 5 or 6 pips, could be 1 to 2 pips actually. So even though you're a little further down, you can achieve a much, much higher risk to reward ratio. And that's why when you see people mastering the confirmation entry, sometimes they walk away with 20R trades, 30R trades, 40R trades, sometimes even upwards to 100R trades, which most people think is impossible. But once you really master this technique, anything is possible. So those are the basic benefits of confirmation entries. Now let's go over how to best utilize the confirmation entries. So basically you patiently wait for price to enter your POI, as I already explained, right? You sit and wait for price to tap into your higher time frame POI, okay? Now, once that happens, this is where we head to number 2, okay? So the first break of structure represents the best risk to reward ratio, but waiting for the second break of structure is a safer trade, okay? So what do I mean by that? Well, if we look at our zoomed in diagram here, we first tap into the POI, we trade away from it, we we create a new solidified high, we then break that structure of the previous solidified low, right? We break the structure, creating a new low, and then we enter off of this right here. So this is technically the first confirmation. This is the first break of structure that occurs, and we are entering our trade based on the first lower time frame order block that we can find, okay? The point of origin for the first break of structure. Now, what that triggers is a second break of structure right there. So if you want a safer option and you're really patient, okay, this requires a lot of patience because sometimes it won't always play out like this, but if you have the patience, then you can wait for the second confirmation. All right, so upon this break of structure, there is of course a point of origin for it. Let me hide this for a second. Whenever there's a break of structure, there is a point of origin, okay? So we have to locate that. And so that zone there, the second point of origin would be our second confirmation, right? That would be the confirmation entry in its final form, basically. So there's the first confirmation and the second confirmation. The first will represent the greatest risk to reward, right? Because both zones are going to represent basically the same stop loss size, roughly. So your stop loss size will be about the same, but the first one is, of course, closer to recent price. The further down you get, your targets are going to have to be basically the overall risk to reward is going to be vastly different, right? So the higher you get in a sell position, the better, okay? So like I said, the first break of structure presents the best risk to reward, but waiting for the second break of structure is a safer trade. It's just added confirmation, right? The more confirmation we have, the better it gets. Now, if you just sit on your hands too much and you're just waiting and waiting and waiting for the third confirmation, fourth confirmation, then eventually the move is going to exhaust itself and you're not going to have, there's not going to be enough selling pressure left to reach your take profit, right? So you do want to pull the trigger. You want to execute on either the first or second confirmation, all right? Now, number 3, this one's really important. So don't be greedy with your stop loss size, all right? If you see somebody on social media or something flexing that they got in with a 0.5 pip stop loss or a 1 pip stop loss, just don't pay any attention to it. It's completely unnecessary. It's incredibly risky, especially with spreads to do with your brokers. Like, you don't want to have that tight of a stop loss. It's just unnecessary. It's just ridiculous in my opinion. So for me personally, a 3 pip minimum is a good rule of thumb. Sometimes I go to 2 to 2.5 pips. It really depends on the situation, especially for pairs like Euro USD and AUD USD. Those have really good spreads. So it's easy to get away with 2 to 2.5 pips. But just as a general rule of thumb, a 3 pip minimum is good, okay? And the next thing I want to mention is it's really important to check the highest time frame, the next highest time frame, to ensure your stop loss is not too tight. So that means if we're on the 1 minute time frame and we're setting our entry parameters, just before you do so, maybe check the 5 minute time frame and just make sure that you're not ignoring some sort of actual important structure, okay? I've done this in the past too, and I still make that mistake from time to time. I'll set my 2 to 3 pip stop loss on the 1 minute time frame, not realizing that there's an area of supply or demand that needs to be tapped into on maybe the 5 minute or even the 15 minute sometimes. and I'll get stopped out just for price to go in my favor anyways. So you can't be too greedy with stuff like that. Okay, so 3 pip minimum is very good, and yeah, that's about it. So that sums up what I have annotated here in this diagram. Now I'd like to move on to an actual chart example. Okay, so we're on Euro USD on the 1 hour time frame. Let me find where I was at. Okay, so here we go. So clear bearish order flow. We're in a downtrend, and we have a very recent break of structure, a very clear break of structure, right? This was a solidified low, solidified high. Price pushed right through that previous low to create a new low. So that's where our break of structure is formed. So once we have that break of structure mapped out, we locate the point of origin. In this case, I've already done so. It's, again, we're on the 1 hour time frame. So this is a 1 hour order block. This candle right here is the point of origin. That is the last point in time where buying pressure was valid prior to the bearish sentiment taking over. So that's the order block or point of interest. We're now waiting for price to reach that point of interest. And instead of taking a risk entry like this, where your stop loss would have to be, at least 10 pips. So instead of taking a risk entry like that, what we're going to do is try and achieve a better risk to reward and a safer trade on the lower time frames, such as the 1 minute or the 5 minute. So let's see what happens here. Let's play price forward. Okay, so we tap in right there. Now, this would be scary if it was a risk entry, okay? If you had a risk entry placed here, whether it works out or not in the long run, this is intimidating. Like I said in the last video, that's kind of like stepping in front of a moving train, right? This is a huge momentum candle to the upside, so it wouldn't be very smart or wise to place a sell limit order here and hope for the best, right? Because there's no telling if price is going to respect this supply area, right? This order block, and continue to the downside, or if demand is going to take control and just push right through this and head towards clearing liquidity somewhere else, okay? So there's really no telling what's going to happen, and that's when we can start utilizing the confirmation entry. So let's do just that. Let's drop to the 5 minute time frame. Now I don't always go immediately right down to the 1 minute. If the 5 minute gives me the information that I desire, then I will stay on the 5 minute time frame. So as you can see, we are tapped in to our higher time frame 1 hour order block, okay? It looks like we've actually mitigated 50% of it as well, so that's a good sign. Now let's see what happens. So actually, before I dive into seeing what happens, it's important to note we had a high right here. This is a solidified low. We've now created a new high, okay? So the confirmation entry would begin if we can see a clear break of structure of this low. I know it might be hard to see, but that's only because this candle was so impulsive and filled with so much momentum that, we don't have the typical like diagonal movement that we see in the market. This was just such a high momentum candle, but regardless, we made a high here and then price came back down to create this low. So that is a high and a low. All right, so we're looking for this level to be broken. Let's continue to play price forward and see how this plays out. Okay, so that's a break of structure. Quite impulsively. It didn't continue very far, but it still broke and closed with a full body candle. So that's our break of structure. And that would be the first break of structure, right? So if you really wanted to, you could target the point of origin, which was here. Okay. So if we were to get an entry here, we'd have a very tight stop loss just above that wick to be safe, which allows us a 3 pip stop loss, which is my minimum. And then we could target recent lows for just over 38 pips. That would give us just under 13R. Okay, so that's fantastic risk to reward. Now, here's the thing I mentioned previously, the second break of structure would be the safer bet, right? The first break of structure can achieve you the best risk to reward, like 13%. If you're risking 1%, that's fantastic. But it's a little bit riskier. And also one of the things to keep in mind is that oftentimes it will not even be triggered, right? So sometimes you set a limit here for the first break of structure and price never makes it there. Okay, so the second one is definitely a safer bet, but it's always good to be aware of the first one and get in if you can. And maybe since it is a little bit higher risk off the first break of structure, you could use 0.5% capital risk instead of the full 1% that I'd recommend, right? So that would be a good way to mitigate the risk a little more. But as you can see, this is fantastic risk to reward ratio. Let's see if it gets triggered in. Nope. So because of this is another break of structure, right? So that kind of invalidates this whole order, because we have, after this break of structure, we had a new solidified low, we had a new high, and now we broke that structure to create a new low. So like I said, that kind of invalidates this now, but we can still leave it there just in case. But let's go ahead and map this out too as a break of structure, because it is valid. Okay, so I'm going to hide this for a second. I'll hide the parameters, but I'll keep the Fibonacci tool up here just to represent that that is still a potential entry, okay? But now the new potential entry would be this small indecisional bearish candle, okay? That would be the second confirmation of the confirmation entry, okay? That is like the complete structure of the confirmation entry. Because we had a clear break of structure with an impulsive candle, okay? So we now have two breaks of structure. So this is less risky than just the first break of structure. However, there is something to keep in mind. This level here could be used as basically a liquidity grab or inducement, right? We could induce traders into believing this is valid just to push higher, clear any liquidity from resting orders, just to trigger this entry and then fall from that point on. So it could be used as inducement. That's something to consider for sure. And another reason to potentially risk 0.5% instead of 1% if you're unsure, okay? If you're fully confident, go for the 1%. If you have any doubts whatsoever, go for 0.5%. It can't hurt. So this would be the second confirmation entry. So let's see how that goes. I'm going to set parameters for here as well at the 50% mark, because that gives us a better risk to reward ratio. We could go 2.5 pips here. That still leaves us some room above this little range. And if we target recent lows, that gives us almost 11%. So you'll notice now the first parameters were about 13R, and this is just under 11R, okay? So there is a big difference there. Like I said in the tips up here, somewhere, okay, never mind, I'm not gonna find that right now. Anyways, I mentioned in the text up there that the first one would give you the better risk to reward ratio, but the second one would be safer, okay? So you can see that it was just under 13R, this one is just under 11R, so big difference. Let's play price forward and see what happens. Let's see if we get triggered into this trade. So we're still pushing lower. Now I'm not gonna, like I said, I'm not gonna go for the third confirmation, fourth confirmation, fifth confirmation, because then it's just getting very tricky, right? And you're almost certainly gonna get induced into the wrong trade if you're chasing that. So I stick to the first and second confirmation. I'm not gonna go much further than that. So no, I wouldn't be targeting this as an order block, even though it broke structure here. That is a valid break of structure, but you know, I'm not going to be targeting this as an order block. It's too close to my actual point of interest, and we still have this potential point of interest up here. Okay, so let's play price forward. Do we get tapped in? It's getting close. Okay, there we go. Oops. There we go. So let's adjust this. Okay, so now we're triggered into this trade, right? Price reached the 50% of our order block. This is the full confirmation entry in effect, okay? We've had the first break of structure. Price has not reached the first order block that caused that first break of structure, but we created another clear break of structure, and we're now targeting that order block, and we have just been triggered into the 50% of that order block, okay? So let's play it forward and see how this one goes. Now, remember, before I play it forward too much, what we're looking for to gauge the health of this trade is another break of structure right here, okay? So if price can show me that it has enough selling power to break through that level, then this one's basically a wrap, you know, like that shows the health of the trade. So let's see if we can achieve a break of structure again, now that we're triggered in. Looking good so far. A little bit of a pullback. Okay, there we go. So actually a minor break of structure here, showing intent. Right, it's showing bearish intent. But then we have our proper break of structure right here. So at this point, my stop loss would almost certainly be moved to at least break even, but most likely a little bit in profit, because this is our new high, okay? This candle represents our new high. So my stop loss could comfortably be just above that high. And, you know, at this point, what is it, like, yeah, it's like 6.5 R floating profit. So at that point, I would more than likely remove 50% of my position, or maybe not 50%, but a good amount just to secure profit. And again, moving my stop loss to a little bit in profit as well, so that if price decides to reverse and trigger my stop loss, I will still walk away with a win. But regardless, let's see how this goes. Just barely missed. He's gonna, let's pick up the pace here. I mean, I assume that would have been full take profit. Like, I didn't set these parameters too carefully, but let's see if it fully goes through. Okay, anyways, that's just dragging on. Anyways, it hit the take profit. I set these very arbitrarily. Typically I round it anyways to 0, but anyways, that's almost an 11-hour trade, and that's a pretty great example of the confirmation entry, right? We had the first break of structure. Price never made it to the point of interest that caused, or sorry, the point of origin that caused that break of structure, and that's okay. I would have certainly had an order set here, and you know, once this whole thing took place, I would have just deleted the first order, so it's no big deal. So again, once the second break of structure occurred, we located our order block that was responsible for it. We set an entry at the 50% of that order block because that gives us a better risk reward ratio, obviously, rather than entering at the low. We entered at the 50%, okay? Price tapped in beautifully, basically no drawdown whatsoever, just little wicks tapping into it. And then it took off from there. We had a minor break of structure showing bearish intent in the market. And then we had a full proper break of structure of the most recent solidified low. And then it just took off towards the take profit from there. So really overall a beautiful trade and a perfect representation of the confirmation entry. So I hope you guys enjoyed this. Let me know if you have any questions. I'm always happy to help, and stay tuned for the next one.
This highly profitable strategy makes you highly profitable trader. This strategy is based on supply and demand. This trading view indicator aids you when to buy, sell, and take profit. It is known buy and sell in green sine whales chart. You can get with the trend. This is not a luck, it's a winning strategy. 25 years of experience taught me which strategy works. You can't trade with the fear and emotion.